Welcome everyone to yet another of this series in technology vertical deep dives and discussion with WiderPool, CIONET hosting us, and again privileged for the third time to have Salim Ismail on this call with us. As most of you will know or be familiar with him, he is extremely well known and respected in the innovation world. Having initially kicked off at Brickhouse's incubator, that's Yahoo's incubator many years ago, to more recently writing an amazing book, Exponential Organizations, and heading the EXO Foundation. So welcome, Salim. Salim will be actually giving us his thoughts a bit later, but to kick us off today, we have Cesar and Michal, who are both co-founders at Fluid Blockchain Accelerator. Again, have been anchors of two of our other calls, giving us a bit more of a flavor and deep dive into how blockchain technology has been affecting traditional industries. So today we're going to get their thoughts on how this is applicable to the insurance space. I guess just in terms of an introduction, I won't take too much of the time away from our speakers, but it's an industry, as most of our attendees will know, has been quite traditional in terms of how insurance is sold. From that to actually being able to predict it correctly, and then it's been a very general approach to pricing as well. It's not personal in terms of circumstances, and in terms of sign-on, it's a very time-consuming and archaic process. So I mean, that's the kind of background of an industry that is rather disruptive, and to see so many verticals of technology, from big data challenges to AI to blockchain, IoT, really make meaningful changes to the industry. So anyways, without further ado, that's just a bit of a background. For those of you who weren't with us for the initial question Salim posed, just to give you a sense of who's on the call, we had a really broad interest from CEOs, CIOs, and country heads in life and non-life insurance, spanning most of Europe and Latin America. So I think a really healthy a group to maybe have some really interesting discussion post some of the speakers. So we'll kick off without further ado with Cesar and Michal to take us through some of their thoughts in the work they're doing close to block applications in this space. Over to you guys.
Hi, Adarsh, and hello, everyone. So this is Cesar Castro here. So for us, it's a great pleasure to continue this webinar series and now to focus on the insurtech industry. So in the first section, we will cover basically the basic principles of blockchain, and then we will see how blockchain is bringing opportunities and really abundance into the insurtech business. So with that, let's start sharing. So let me start a little bit for the big picture. So we all been part of the revolution of the internet, and now we are seeing how this internet is evolving into an internet of value with mobility at the center, and also the blockchain as a new technology, a new algorithm that really allow to do many things. So it's been a lot of excitement about how some projects are, let's say, printing money. But really, personally, what is more exciting to me is not that yet. It's not just that, but the fact that with blockchain we can really change many industries, and it's been already over 16 industries that is being impacted. And it's not going to stop there. We will see many trends that are happening now, particularly in the energy sector here, where the price of the renewables is going down and down, and the IoT, another enabled technology, another exponential technology is coming to bring this Internet of Things, where all the things are connected. So with that in mind, let's talk a little bit about blockchain in simple terms. So I'll try to make it too elaborated, but at least we all can understand. So it's a distributed layer. And what it means that the combination of two things is new technology on how to manage database and how to do algorithms that are trustless but generate trust. And at the same time, is totally secure. So it's a layer because it's a database that you write once and it's immutable. So nobody can go and change it because it's a decentralized network. So that decentralized network is also distributed. So everybody has the same database copy in each of their computer. And it's also shared because, as I said, all that database is in each of the computers that are part of the network. So we are used to centralized network like the picture we see here. Now it's coming, these decentralized networks with a database that is immutable and that is secure. And at the same time, the database is shared and the database is distributed. So these are the key things to understand what is the blockchain, and are the basis also why this technology is impacting on many industries nowadays. So from the business perspective, we have seen business model very successful on the platform economy. You know, we are all familiar with Facebook, PayPal, Salesforce, Google, these kind of platforms that are centralized and add a lot of value to the people and change many ways of doing business. More recently, we are seeing new economies, the sharing economy coming to us, where companies like Airbnb and Uber are really leveraging assets from members in the community, and they basically optimize everybody's resources. And then where we are going is to a true peer-to-peer economy where people can go and connect one-to-one with something that is very important, the trust. So, and that is enabled by the blockchain. The first example we have seen on this is the Bitcoin itself. That we all know is a crypto that is used as a payment mechanism, and Ethereum that is being created, the smart contract that allowed many already applications to be built on top of it. The benefit of this new peer-to-peer network are related to many things. The first is that it really improves the efficiencies for industries. It brings security. It also brings speed, and of course, it helps to save money into the business. Because in many of the cases, what the peer-to-peer economy allows is a totally disintermediated. So one peer can connect with another peer on the other side, and you don't need the intermediary because the trust is within the network. So as I say, is changing many industries. So the first wave of innovation we saw was coming into the digital currencies. So this digital currency is a very generic term, but the applications in general are more specific and are important to understand. These digital currency are changing the global payments, the remittance business, the e-commerce, the peer-to-peer lending, the microfinance. And that's very important because where we are going in the next slides is how this fintech industry is also the base to what we've been developing today as the insurtech business. In the other side, we have the smart contracts. So the smart contracts that initially was developed by Ethereum, but nowadays there are many platforms available with the smart contracts, allow things like the management of the digital rights, the management of the escrow accounts, the management of the trust account, also related to finance, but not necessarily only on finance, because the smart contracts are going to be also key for the new insurance policies and how customers are going to be getting insurance moving forward. Then, of course, the securities market is evolving. Now, initially, everything was about utility tokens and cryptocurrency. Now, experts say that the next big thing is going to come across securities, where the blockchain technology are going to help to tokenize those securities. So they will tokenize the equity, they will tokenize private markets, the debt, crowdfunding, derivatives, anything that has a value has the potential to be securitized. And once that's securitized, it can be distributed among many people. And then it will be a democratization also of the investment, a democratization of the opportunities to get access to innovation and to invest in innovative projects. And then the other thing that is changing is the record keeping. And that has to be also a lot with provenance and tracking. But in record keeping in particularly, now the intellectual property can be better protected. We have voting, ownership, tile records, healthcare. The data from healthcare is a data that now customers can use themselves. And as I say, those record keeping are evolving very fast in projects related to change and related to tracking of provenance of products. So with this, let me go into what we believe are the main application of the distributor ledger technology into the insurance business. And something that is important to understand is that all these are going through pilots and started to get some adoption. So where we see these applications that are emerging now in insurance with distributor ledgers. So the key areas here are the fraud prevention, and we will talk more about it, or Michal, which will help us to go through some examples. We will talk more about each of these things. But fraud prevention will be key. It's a big problem in the industry, and how the network and how the blockchain technology operates brings a lot of potential to help in this area. Also, automatization and efficiency, like in many other industries. Then it will allow the decentralization, and it can really change the life of how the insurance sector is today. And also the reinsurance is another opportunity for this. So with that, let's go into some examples. So as Ardash mentioned, Michal, which is also a colleague and co-founder of Fluid Change, will take us to some of the examples.
Thank you, Cesar. Okay, so the first thing that Cesar mentioned was fraud detection and also fraud prevention. So one of the key innovations underlying blockchain is avoiding double spend problem. Because when you're in a digital world, it's very easy to make a copy of something, but then you have those cryptographic algorithms and blockchain technology that does not allow you to double spend assets. And this has fundamental application in insurance, because you don't want the person to claim insurance twice for the same accident, right? So some of the key principles underlying blockchains, like immutability, so you cannot modify the information, that you can always verify the information, and they are ordered by the time sequence. They are very important because they can help us prevent this double spend problem, but also help us with some of the cases in the insurance industry, like, for example, counterfeits, because we can always verify this digital certificate on the blockchain. Then also some people are unregistered or unlicensed brokers, so also we can verify each and every single person at a very granular level, prove who they are, and also give access selectively to specific information. One example here, which is not insurance per se, it's related, it's about diamonds. So there's a company that etches tiny marks on diamonds, so you can track every single one of them. So this is kind of like a physical proof and physical way to verify the things. So for now, it's much easier to check whether they were stolen, you can verify who owns it and so on. So it's also easier for insurers of jewelry to also understand where the product is going, right? Okay, thank you. So we are talking about smart contracts. Smart contracts, in fact, are not smart yet. What smart contracts do is they allow self-execution of certain programmable agreements based on conditions. So one chief example here that has already been piloted by AXA, a startup called Fizzy and Flight Stats, which is a website reporting flights, is automatic compensation for flight delays. So how does it work? Normally, if a flight is delayed, then you need to run with your luggage, go to a help desk. There's a lot of people there that instead of a typical manual process, when your flight is delayed and you want to claim, you need to queue in, physically go there, wait in the line, someone has to process it. It's executed automatically. So as soon as the site reports that there has been a flight delay of more than 2 or 3 hours, it will automatically generate the claim, and you will get the money or whatever is due for you. So as Cesar was saying, there are many possibilities to have large gains in efficiency in all of the processes. Cesar, can you go to the next one, please? So we're also talking about different distribution and payments models, right? So we're talking about decentralization. What does it mean? It means that we don't need one company, for example, like AXA with a big name that we trust. We can, instead of this one central entity, we can have a system with many actors that agree on what is the state of truth. So one example here is At the Risk, which is doing this decentralized insurance. So what does it mean? It means that there is no one central entity. It's just the ownership and the whole, let's say, underlying mechanism of distributing insurance is in this peer-to-peer network. If you ever heard about a startup called Lemonade, what they are doing is they are trying to disrupt industry using traditional technology, but very important economic principle, which is interest. Because insurance companies and people who want to claim insurance, they're in inherent conflict of interest, because if the company pays out claim, it's not earning money. So what you can do with this kind of distributed system, which you can think of some kind of a automated or programmable cooperative, means that you can align the interest of the institution that does the insurance and the person who is being insured. So there is a certain risk that the big companies will be taken out of the picture, because with blockchain and those consensus mechanisms, you can make sure that the people being insured and the insurance companies have aligned interests. So there is a company called AI Gang. And what they are doing, they're mainly focusing on getting better information, in particular for Internet of Things. Because one important piece of doing insurance is having relevant and up-to-date information based on which you can estimate what are the proper premiums. You need to have actuary tables and so on. What they are trying to do here is they want to automate the process of gathering and processing information in order to have more relevant, better information that help you estimate better the premiums and also automate the whole process. So you don't update it every few months or every few years. You can do it in real time, and with Internet of Things happening and devices being able to talk to one another, it could be almost in real time. So there's this combination of disrupting insurance and reinsurance. So we're talking about this decentralized insurance marketplace. When companies are doing deals, you need to make sure that you all collaborate together. So in most cases, there are no established standards how to exchange information between insurers, brokers, and reinsurers, right? So one of the ways to approach that is to create a marketplace for those services. And if you go to the next one, Cesar. And one way of doing that is creating consortia. So there are a few large consortia in blockchain. There's one for finance called R3. There are some consortia, for example, IBM and Linux Foundation doing this Hyperledger projects or a series of projects. So there's also this consortium for insurance and the reinsurance industry. Basically, each and every time you want to do reinsurance contract, you go into long negotiation process between people providing documents, data, doing validation, and so on. In this particular case, using blockchain, you can verify some of the information, you can verify that it's true, and you can also selectively share it with specific entities. So in that case, you make it much more easy to interoperate between actors and systems, and also make sure that the information you're acting upon is valid. So I'm sure that Salim will be talking about it, but the key question is, we have this webinar, and the question is what happens next? I can't say much for the insurance industry itself, but I can say a little bit about what we try to do at Fluid. So we come back from, or rather come from this EXO movement, which is Exponential Organizations Movement, and Salim will be talking about that, and you might have heard already about it. So our purpose or our goal is to facilitate those blockchain projects, because many of those things are new, many of those things are not tested. So what we try to do is to first identify the opportunities then we go into scoping and trying to prototype the project, then try to launch it and execute, and then also make sure that each and every entity that is this blockchain project has all the core capabilities embedded into the organization. One of the things that we can all do is basically learn from this opportunity. There's this great quote I really like about insurance industry, which is saying that, you know, it's always better to be 5 years early than 5 minutes too late with life insurance. And it might be a little bit like that with the technology, because the technology is moving fast, but it's very deceptive. We're all talking about the pilots, and there's this kind of ebb and flow of technology, which is shown here in the diagram. So first, when everyone heard about blockchain cryptocurrencies in 2017, there was this kind of boom saying that the value will go to the moon. But now the question is exactly where we are, but we're in kind of the spirit of disillusionment. So we see that, you know, it's not that easy to implement. It's not that scalable yet. There are not that many killer applications yet. So one of the things that we suggest to do is basically to test it yourself, go into early pilots. Again, we can provide some additional links and information. There are companies doing pilots, exploring the technology. Because after this period of disillusionment, and the question is, are we at the bottom, or are we not at the bottom? Are we over it, or are we before the bottom yet? We don't know for sure. What we can do is, of course, you know, we can test it out before it's necessary. It's kind of like with insurance. So we would rather be insured before something happens. So I hope that you can disrupt before being disrupted.
Yeah, no, I will say thank you all for the time. Adarsh, I know we normally take some questions, but maybe Salim is ready. We can take the questions at the end. We will stay here.
Yeah, I was about to ask. Salim, how are you doing with your preparation?
Now can you see that?
That's perfect.
Okay, so some of you may have read the book that I wrote where we look at a completely new way of building organizations. And it speaks to the big shift that's happening in the world, which is linear to exponential. Ray Kurzweil found that whenever you turn something to an information-based paradigm, you have an acceleration of radical doubling patterns that don't stop, they just keep going. And we've seen that with Moore's law. But one of those things we noticed at Singularity University, where I'm the founding CEO there, is that we have a dozen technologies now that are moving at this pace. And we've never seen this before. This is a completely unique paradigm in humanity. And when we take this many technologies and move it this quickly, for example, in neuroscience, the resolution at which we can image the brain is doubling every year. Drones are doubling every 9 months in their price performance. And we've seen that this has a forcing function on society with 4 major dynamics at play. The first is pretty obvious. We're digitizing the world very rapidly, right? Our memories aren't in our heads anymore. They're in our smartphones. But we found that this becomes very disruptive. If you think about the shift from film photography to digital photography, you have there in sharp relief the transition going from a material scarcity physical view of the world to an abundance, no marginal cost to take an extra photograph, a digital view of the world. And that transition we're seeing across all of these. And that's having a very disruptive effect, not just on a technological level, but very much as a societal level. And we see the kind of this technologies appearing all over the place. I'll touch on just car ownership and transportation for a second. You know, the cost of owning a car is about 60 cents per kilometer US. An autonomous car is about 1/3 the price. And so for all of the wailing about, you know, should we be allowing these cars, et cetera, the pure economics of it will drive it. Now, when you have autonomous cars, you radically, obviously, change the insurance patterns. One of my favorite statistics about the car industry in terms of side effects is that 50% of all US court cases, 50% are car accident related, right? So now you can actually take out a bunch of the lawyers as well, which might be exciting to some folks. So we think this will drive the pattern in a very different way, this concept of disruption. But obviously what we're seeing today is that society is not ready for this. We're seeing a very the tension that we see in the world, in every country and in every industry, and even in our old institutions. All of our institutions struggle with this. And I think the big challenge with insurance, and I'm going up very much to a macro level, is how do you adapt to this? Right now, a lot of the regulatory side protects you. It's a heck of a mess to navigate the regulatory, but it's also providing a nice moat from which startups have a tough time attacking. You take that moat away and all of a sudden the hordes start coming in. And we've seen that in the music business and the newspaper business, but now hotels, cars, taxis, etc. It's clear when you listen to Cesar and Michal that this will happen, this decentralization will happen. It's just a question of how we'll navigate our regulatory to deal with this. When we think about the economic factor, another huge driver is the sheer cost drop, right? A LiDAR unit driving an autonomous car costs hundreds of thousands of dollars 10 years ago. Then it was $75,000, and now it's about $40 for the same thing. And the reason is that there's 3 or 4 technologies in there that are all accelerating. So if one is accelerating in a doubling pattern, you get 50% drops. 2 will get you 75% drops, and 3 will give you 87.5% drops all in a year. And so this is the pattern that we're seeing, the reason it's happening at this pace. At the very macro business level, we're seeing the same thing. We're seeing products turn into services, right? Gillette was sold for a huge amount of money, and then Unilever bought this subscription model for this. And how do you think about product insurance or liability insurance in this mode? And I really just want to cover this slide a little bit because it's very hard to get our heads around this. So we saw doubling patterns in mobile phones throughout the decade of the 2000s. In the year 2000, we had 100 million mobile phones, doubled every 2 years, to now we have we went to 200 million, 400 million, 800, 1.6 billion, and so on. And what Vinod Khosla did in this chart that you see, he went to look throughout that decade at the mobile industry expert analysts, the Gartners, the Forresters, the Jupiters, the McKinseys, and he asked the question, how well did they predict that pace of change? And you can see they went up 100% from 2000 to 2002, but the projections, the collective aggregate projections from the mobile phone industry experts in 2002 was 16%. Okay, so it went up another 100% in 2004, and their net prediction was even lower, right? They didn't go up, they went down because they kept expecting it to level off. The next prediction was 12%, and then it went up again. And in 2008, unable to see 3 doubling patterns in a row of doubling of mobile phones, they predicted 10%, right? And then in fact, it doubled again. Now, something weird is going on when you are off by 10 times. This is not a math error, this is a cognitive error. And we're seeing this across the board where people are not seeing this disruption hit them, right? So people kind of look at the blockchain and so on. And what happens, we've noticed, is that you tend to ignore it, and then boom, it's everywhere. And then you have a huge issue. And the underlying driving force that makes this relentless and inexorable is the sheer democratization of these technologies, because they're all going through this type of a curve where you get something turning digital, the costs go to zero, you get open source communities forming, and then you get radical disruption of the status quo. Elon Musk, today any entrepreneur can enter a legacy industry with a beginner's mind, leverage new technologies, and totally disrupt it. Here's some fascinating things happening. You can get $100 headsets that give you a pretty good fidelity readout as to what brain waves are going through your brain. What you see there on the right is Will Henschel, who's the inventor of this. He used to play guitar for the Eurythmics, and you see me on the left. And what you see here is my brain before and after he plays the music, and you can see I'm in a deep focus state, right? And so this is hugely challenging now for, if it takes off in usage, for Red Bull, Starbucks, coffee makers, and so on, right? So you demonetize radically because all of a sudden this guy can have people focus on demand at zero cost, where we don't have to consume beverages, ship things around, and so on. And so there we've taken something that was physically needed, like a coffee in the morning to focus. Now I can just stream it on my internet bandwidth. and we may just take out the need of all the logistics behind that and the need to insure all of those physical products along the way. And when you look at the future of generally financial services, you have these obvious kind of trends going on. With the sharing economy kind of exploding in say, even wealth management is kind of completely in a different world. I was talking to one of the wealth management gurus that I know, and he does not put any of his money into the traditional ways in which you would protect wealth. He's got 70% into high dividend stocks and 30% as an LP in high risk startup funds. So we're kind of literally changing the structure of the marketplace. Healthcare is happening the same thing. But now we're seeing huge disruption in insurance as well. And I want to talk for a couple of minutes about where we see this going. This decentralized comment is a really important one. We have been ratcheting back and forth from a centralized to a decentralized model to run the world forever, right? We had feudal systems and kind of kingdoms, very top-down structures. Then we moved to democracy, right? And we went from democracy to capitalism, which is again very top-down and running the world in a particular way using money. Now we're decentralizing again as we shift the modality of the world from money to more to information, right? A startup today is more interested in collecting data about their users rather than money. And you see these new models now where we can route around these old structures. And today we run the world on this set of very top-down structures, Judeo-Christian religions, the military-industrial complex, the corporation. But now you have the maker movement, the DIY movement, Burning Man, technologies also that are decentralizing, blockchain, that allows to reorganize really the fundamentals. And this is the big shift that we're seeing. We've been looking at this quite in a fair bit of detail around how do you organize for this. And we've noticed that there's a completely new breed of organization that's being built. This comment by David Rose basically saying, look, all of our organizations are built for top-down efficiency and predictability, doesn't work in this new world. You have to be way more adaptable. So I predict that, you know, obviously in the insurance business, you go to real-time pricing mechanisms. If I've got life insurance and I'm about to do a parachute jump, my insurance rates are going to spike quite a bit in terms of that. We will have spot pricing and new derivative structures coming into this place. And we found this new breed of exponential organizations are delivering minimum 10 times better, cheaper, faster than their peers. The index that we have of about 100 of these is quite fascinating. If you're not familiar with GitHub over there on the right, it's worth looking at. GitHub is a social coding platform. They're a 10-year-old company. They have no assets, no workforce, no intellectual property of any kind, and Microsoft just bought them for $7.5 billion, okay? Now, if you have no assets, no workforce, no intellectual property, what is there to protect from an insurance perspective, okay? And this is the enormously huge question, because now we have communities like Uber of drivers, communities of Airbnb users. TED uses community to scale. And how do you ensure things like that, and how do you protect that? We found that when we have these new organizations, they're using some or all of these characteristics to run their models. Uber doesn't hire its own staff, TED is used in community, and so on. And we have a total inversion in how we build our companies. For the beginning of time, you get an asset, you get a workforce, you put a legal boundary around it, and you sell access to scarcity. Right? Basically, if you didn't have scarcity, you didn't have a business for the last thousands of years. Now we're flipping it around and we're finding business models around abundance. Okay? Now in insurance, you typically had the scarcity was you had access to a pool of capital, and you could leverage that pool of capital to provide protection on an actuarial model to people taking risks. But now that access to that pool of capital is being democratized, we're going to see a complete shakeup in the overall model. We found, by the way, that there's a complete correlation between how flexible and adaptable your organization is to the stock market performance. And so we've got a total correlation between measuring adaptability of an organization. And when I talk to insurance companies, and I've talked at kind of C-suite level to AIG, Manulife, MetLife, et cetera, we find that the insurance industry is really difficult to update itself. Because if you're an actuary, you know, think about new models. It turns out it takes about 30 million life years of data for an actuarial scientist to update their models. By the way, actuaries are the original data scientists, right? And so they get kind of upset that there's a whole new breed taking over their world. But the models are reticent to update. And I want to tell a quick anecdote here that I think many of you can resonate with. There are, today you have platforms like Kaggle that allow you to have a huge number of data scientists on Access, 400,000 or so. And you can put up a contest for $10,000 for whoever has the best algorithm for a certain data set. And we were able to convince Allstate Insurance Company to put their claims algorithm up on this contest site. And the CEO was like, wait a minute, I've 50 of the best actuaries in the world working 24/7 on this. We've been curating our algorithm for 60 years. There's just no way some random data guy is going to beat this if you don't understand the industry, etc. So we said, well, let's try it. So we anonymized some data, put it up on this contest, and their 60-year-old algorithm was beaten within 3 days, right? In fact, it was by the end of the contest, it was 270% better. Okay, not 5 or 10%, but like just almost 3 times better. Why? Because the smartest people in the world, even the actuaries, don't really work for you today. They work for Google, they work for LinkedIn, and if you give access to these people, you don't need to hire them, right? If you think about hiring a data scientist today, they're really hard to find, they're really hard to hire, and then you have to manage them, which is super hard because they speak geek and they have weird hours and so on. What was more interesting, and the thing that I want to kind of touch on here, I'm just going to flip through a couple of slides here, is that the insurance model that we talked about in Allstate, even though they came up with an algorithm that was 3 times better, they never implemented the algorithm. The actuarial kind of body inside Allstate refused to believe that this could be this much better and refused to implement it. And this was a huge, I was talking to the CEO, and he couldn't believe that he couldn't get this pushed through with such a huge obvious monetary capability. We're now starting to see companies go into all sorts of adjacent spaces that they try and deal with this new world, right? Corona is now about to spend $4 billion on cannabis. I guess there's clearly a business model in messing with people's minds in one way. Now there's another. But look at Nestle. They're now using DNA to create personalized diet. The insurance implications of things like this are very profound. And I'm going to end on this comment. Here's what I think happens to insurance over the next few years. It used to be that you could kind of roll out an insurance product and basically get the government's blessing, and then basically insure that sector, that segment. But pretty much everything is changing around us. So here's what I think happens. And in fact, as I've thought through this, I don't see how this doesn't happen, right? So if you take something like drones, drones are changing so quickly that by the time you formulated government policy, formulated legislation, some sort of enforcement mechanism to protect society against a particular drone or something like that, the drone is 3 generations ahead and you're behind the 8 ball. So regulatory frameworks can't cope today with where the technology is going. It's moving too quickly. What I think happens is that the insurance companies go to the government and say, listen, you can't regulate these new technologies, drones, personalized DNA, cannabis, et cetera, let us handle this. Let's turn it into a liability question. If that product or service can get liability insurance from us, then just allow it. And so if I want to use drones to deliver beer to ice fishermen, can I get liability insurance for that application? And if I route around populated areas so I don't risk dropping beer on people and I can navigate to that, then I can get insurance and the government can basically say, off you go, you're insured. So I think insurance companies have a really interesting strategic opportunity to become the regulatory by basically petitioning the government and saying, you can't navigate this. We have an economic model and a capital base and the incentive structure to protect use cases in a particular way. Just let us handle it. And I think that's the massive opportunity that exists in this world. Now, the way you get there is you have to solve what I call the immune system problem. If you try anything disruptive, if you go to an existing insurance company and try and update it, the antibodies say, no, 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 we should just keep doing things the same way. And we've been working on this 10-week sprint, which we piloted with Procter & Gamble. We find we're able to move leadership, culture, management thinking 3 years ahead in 10 weeks. We've run it about a dozen times now, and actually we're now open sourcing it in our own model, eating our own dog food. So we have a new book coming out in about a week that takes that manual of basically turns it into a recipe book and says, let's allow anybody to go run this. And we have some really good results coming out of that. So I'm going to pause there. I've kind of gone very high and broad to kind of cover some of these areas, but let's open it up to some Q&A.
Great. Salim, thank you so much for that. Really interesting, especially your sort of closing thoughts on what the insurance industry can really pose for us, a trigger or a catalyst for further innovation, jumping over the regulation kind of hurdles that we have at the moment. May I kick off and just really get a gauge from you guys, and Cesar, please feel free to input as well, because you're seeing this from how mature insurance applications are in the blockchain space. But I'm really keen to understand, on the spectrum of urbanization to democratization, where do you feel we are when it comes to the insurance vertical?
Yeah, I can start. What I see is definitely there are a lot of pilots going on as we share here, and some of those pilots start to be implemented, so adoption start to happen. I think the slide that Michal shared about the new consortium within the industry, it's very important. There are big partners, big companies already being part of it and experimenting. And I think this kind of consortium will allow the industry to move very fast. So if your company is not in that consortium, that will be something that I will evaluate to participate. And as we say as well, there are many projects going on. So it's always good to go and be part of it. Because the key point is what was in one of the slides. If we wait until everything is there ready, we are never going to catch that play. If we are there before, so we are going to be able to go into the flight. It's not going to be comfortable anyway, but we will be able to make it. So it's very important to be earlier when we are talking about these exponential technologies.
Okay, Salim, any thoughts? Because I get the sense that we're still quite early, really, in insurance. Tech and insurance disruption.
Well, I think it's desperate. I think insurance companies are very far behind. I was talking to the CEO of Manulife, Don DeLoyne. Manulife is a big Canadian holding company. They own a bunch of big companies around the world, and it's about a $40 billion company. And he said it's really hard to get my people because in insurance you collect the money early, and you actually don't care downstream what happens in many cases, right? And so it's an incredibly lucrative business model if you can get it. It's like, it's one of those where it's a great business if you can get it, right? Yeah. Where the model is typically flipped around from traditional things like retail and other models. And the challenge is getting them to adapt. And my big fear for the insurance industry is that they're sitting there with these old models. Their mindset is stuck in these traditional ways. They're maybe the hardest group that I've seen in order to wake them up and so on, because they have literally, they look at their thing and they go, absolutely no reason to change. Yeah. And they resist change very, very dramatically. And I think what will happen is these insurance companies will go along like this, and then boom, they'll be disrupted very dramatically. Yeah. The smart ones will do what Tom Wilson at Allstate did. He has this physical agency model that he can't disrupt. And it's hard for him to get around that. He went and bought Esurance, the leading online insurance company, and left it alone. Right. So now he's playing his bets on both sides by owning the traditional and then buying the new and leaving it alone, and therefore he hedges his bets. And I think we'll see a lot more of that happening.
Okay.
Yeah. So maybe if I can add a bit of a tangent thought. It's not related to decentralization per se, but if we look at crypto and insurance, both are very early. There are very few institutional investors who want to go into crypto because of issues of custody. So if you look at it, recently there was an announcement that Winklevoss brothers were the first ones who get fully insured crypto custody product. So Cesar mentioned that before. Maybe there is also opportunity for companies from insurance to lead the regulation and lead innovation. Because once again, it's like, it's better to be early also with crypto. If we bought Bitcoin, 5 years ago, we would be millionaires now. And in a similar case, when the institutional capital starts pouring in, someone will be making a lot of money. For example, making sure that the funds are kept safe, or they are insured in case something happens.
Interesting. No, really interesting. I mean, Salim, you mentioned this regulation hurdle and the opportunity the insurance space has over this. I mean, this is I see that definitely, but I think obviously we're still a way away from the opportunities and the innovation being kind of worked on in the insurance space. But is this conversation happening to sort of use insurance as a way to jump over regulation at the moment? What examples do you have of that? Or is this something that you think, as a macro trend will happen eventually?
I think it's a macro trend, and it will happen. Traditionally, insurance companies have strong lobbying kind of mechanisms where they go and talk to the government and say, look, you really should get your people to insure this. And then they could go in after the regulatory, right? And so they get the mandates passed on how life insurance should be structured, and then they show up with the products and services. Luncheon vouchers is a famous old one where they would go and lobby a government to give tax breaks by having employers give luncheon vouchers. And then they show with the technology and say, oh, by the way, here's our product. And so this is an old pattern, but I think there's an opportunity, because as governments will lose the ability to navigate this. I'll give you one of the most staggering comments I've heard in many, many years was a few months ago from the European Central Bank, where they flat out came out and said, we cannot regulate cryptocurrencies. We will not be able to do it. Now they're correct, but it's a staggering admission, right? Yeah. If you can't regulate cryptocurrencies and people more and more store value there, basically insurance products will be layered on where you have the underwriting capital, right? And so when you get, and as Cesar mentioned very accurately at the beginning, as we tokenize more and more traditional assets, we'll see insurance shifting to being underwritten on more traditional tokenized structures. Now you can atomize the tokenization and atomize the securitization of different asset classes and give really different types of insurance in a way that was never possible.
Yeah,
right?
yeah.
And so there's obviously time breakdowns. Like, it would be great. I'm pretty safe in Toronto, but if I want extra passenger insurance for riding around in a car in Mexico City, it would be great to get that.
Yeah.
And we'll see those kinds of models start to appear that will be allowed by this new wave. But in terms of the general, you really need a coalition of insurance CEOs to go and do this with the government and say to them, let us handle this. Yeah. DNA applications and medical applications are probably rife for this. And you have a massive kind of logjam right now around this. So for right now, you can get your the license to be a doctor or a lawyer unless you have malpractice insurance, right? And so, but if I can get malpractice insurance in totally different ways, I don't even need the regulatory to be a doctor. Okay, and I'll give you a very tangential perspective on this, just from a side, just to hide an analog. Today, we hire people for the most part on what degree did they get at what university, which puts a stamp saying, yes, we ratify that this person has this type of a brains and whatever, okay? I mentioned GitHub earlier. On GitHub, I can do sharing of source code and collaborate on source code, and I can give you a Yelp rating on your software, and you can rate me, okay? And there's a peer-to-peer rating system. It's been so successful that today in Silicon Valley, your salary as a software developer has no bearing at all on what university you went to, the degree you got, or the grades you achieved. It's 100% what is your GitHub rating. So we've gone from a top-down centralized structure to a peer-to-peer transparent meritocracy, and the value of a computer science degree just went to zero.
Yeah.
Now, at some point, if that happens with, say, doctors, the value of malpractice insurance goes to zero, right? Same with a lawyer. And so we're going to see this massive shakeup across the board. Now, you have two ways of dealing with it. You can either say, I'm going to wait till it happens and put my head in the sand, or I'm going to jump ahead of it and try and direct where it goes in a proper way. And I think that's what the opportunity that exists for the insurance industry.
Interesting. Thank you for that. You spoke about the insurance companies generally being still a bit I guess complacent about business and reaping large rewards. And basically, and I know it's a generalization. Go on.
No, the phrase is desperately complacent.
Yeah. Okay. Desperately complacent then. And I'd agree. And the focus has really been on acquisition of business, and because risk is there's a lot of meat on the bone in terms of how they've assumed risk, even if there are shocks, they're still able to swallow that. But I guess moving from a kind of generalist approach to even society where there are personal needs, and there's a lot of mistrust with the insurance industry. So moving to a situation where I'm healthy, and if I'm relatively safe, I feel the need that I should be I should be paying less because I'm a lower risk of myself. How do you feel that this general trend in every way to customized and tailored information, and also being able to we've got so much technology that can accurately predict risk. So where's the tipping point on the risk spectrum? Going from a kind of really generalist approach to a really specific requirement approach. And there's so many aspects. I mean, there's trust with the industry. There's you mentioned Lemonade, which I think is a great example where if I had the choice to perhaps insure where there's a socially responsible angle, where excess premiums from the whole pool are not taken as profit, they're given to worthwhile causes. I might resonate with stuff like that. I mean, so there's a kind of cultural shift that's driving this. What are your thoughts on that?
Well, I think you're going to see some. So right now, insurance is basically socialism in a capital pattern, right? You're basically saying we're going to share the collective risk in a pool, and say health insurance, the younger people pay a premium, although they don't get sick, and that subsidizes the older folks, right? And so you're socializing the risk across, and it's a totally valid and appropriate and decent thing to do. We're going to start to see, as we deregulate and companies can't do this, what will happen with crypto is that somebody will show up and say to the younger folks, hey, I'll just insure you, pay your premiums, very low premiums, but now there's no capital pool to pay for the elderly people, and you end up in kind of a death spiral, right? With the inability to regulate across the board. That's one big challenge. The other big challenge is the huge pressure now for banks and other folks to get into the insurance industry, and they're going to try and slice off that. I actually was part of the founding team of an insurance company 20 years ago that went into Ireland, where the EU regulations forced health insurance, opening up the health insurance marketplace. And this new insurance company made the strategic decision only insure people under 30, right? So you had super low premiums, everybody drifted that, and the whole model collapsed. And it went all the way up to the Supreme Court, who said, wait a minute, this only breaks the model, and you can't do this. And so they killed the whole thing. And so that challenge is there on how you do it. Now, there's two ways of dealing with it. One is to go to the governments and say, let's proactively figure this out. Or you wait till the whole thing breaks and then you try and fix it, which is what happened in Ireland.
Yeah, interesting. No, I'd agree with that. I know we're kind of approaching time on this, but I haven't seen any questions come through. So please, any of the attendees, you can put through questions if you'd like. Otherwise, I will just keep going. Question I have now for you guys is, we have other industries and innovation in other industries changing really how insurance is going to be thought about. So, I mean, think about safety when it comes to automotives. I mean, with autonomous cars, I mean, the need to even insure vehicles is just dropping. I mean, it's almost evaporating. I feel that automotive insurance is really threatened by this. And then you also have life insurance, which, with longevity and better health, do people even feel the need to seek life insurance at all? I don't know. I mean, I'd love to get your thoughts on, what we'll need to insure, and what's the kind of future on the horizon of how we think about insurance.
Right. Well, I mean, there's a huge question mark there, but just let me tell you this little factoid. Life insurance companies are now operating on a 160-year lifespan for their actuarial models.
Okay, well.
So they're already building it in. And also, when you can calculate it out that far, you collect the premiums in the particular way. So they've already worked that out in their models. And so what happens is in the short term, they have a boom where you milk the premiums because you don't have to pay out for a very long time. And then people will cotton onto that and go, wait a minute, what the hell? And then they'll go down the other way. And so honestly, as the world generally becomes a lot safer, the need for insurance does get less and less. But we do have one X factor, which is climate change, right? When you think about property insurance and liability insurance on coastlines and due to extreme weather events, quite simply, big insurance companies will just refuse to insure these things. And it'll basically fall back to society because the capital, you take what's happening with Michal in the Panhandle, right? It's pretty much wiped out like hundreds and hundreds of miles. And there's no way an insurance company would deal with that. And so people will basically have to live without insurance. And that'll be bad for the insurance sector because you don't start this downward spiral where people don't bothering to get insurance. I think the other big threat is the fact that we're moving away from money as a concept, right? We're moving from money to information. And we need a lot less money to do things. I mean, the amount I can do with this phone with almost no capital spent is kind of mind-boggling. You know, so what do you insure, right? Now you're insuring data. And I think that's where things will start to get interesting over the next few years.
Yeah.
I would like, Adarsh, to come back to my first slide, because I think your point is very important. Industries are changing, the world are changing. Now, as Salim was saying, we have more and more data of what's going on. So what before was, you know, kind of ensuring something that is going to have the risk of happening. Now it's going to be more about how you monitor what's going on, because you have the information and you know what's going on and you can predict much more easier and in a much more better way what's going to happen. So definitely it's a big change from the industry, and that's going to be Internet of Things to connect all these things, all the information, artificial intelligence, to do all the algorithms and all the information to do the prediction. And then of course, blockchain, which will be the database that will be able to store that amount of data. So all that combined, not only the industry itself, but all that's happening in all the other industry will have a tremendous impact into insurance.
Okay. Just a question on blockchain that I've been meaning to ask you, Cesar, is, you know, I mean, to a lot of people, these distributed ledger technologies require at least a form of critical mass, if you like, of an ecosystem or a kind of stakeholders buying in for it to work. What are your thoughts on that when it comes to the insurance industry? So, I mean, you gave some examples of reinsurance. You know, if not everyone embraces it, be it users and you know, existing companies and new technology companies, is that important, or can you have small pockets of communities that are, you know, using this technology and embracing it? So for example, if you sort of reinsure and transfer information to, you know, and ensure that doesn't have, you know, it isn't connected to this ledger and platform. What are your thoughts on that? And so is that why there's also kind of a slower adoption to, you know, a blockchain as a use?
Now, what I see is two different trends. In markets where insurance works, you can get these consortiums working and you can have these private blockchains where you don't need that big scale or you don't need that many customers. You can do it within the group of people that is working together, like the consortium we presented here. And that will be helping in the industry to be more effective in those markets. So customers will be benefit with better services and better insurance. And then in other markets where insurance doesn't work, people will get together as they did with the smartphone, and they create concept as they did with the mobile payment in Africa or in China, which is, you know, much more evolved than, for example, in the United States. So I will see these two trends, and those two trends have been showing some other industries, in some other technologies, and I see the same will be happening into the blockchain. So we will have the private blockchains for consortiums and organizations, and maybe more, the incumbents can play a great role there. And then we will have the public blockchain where you have this large economy of scale, and will be the opening door for new players in the industry.
Yeah. Okay.
Yeah, like if I can add some things here. Salim was saying that, you know, we don't have one exponential technology, two exponential technologies. It's just the confluence and compounding, let's say, benefits from those will make a difference. So I'm calling in from a mobile phone. And let's say if I wanted to earn money as a police person, I should probably get your GPS data because I could automatically fine you. So once you get information from the mobile phones, and then in the US, you activate medical health records, and you start combining all this information and allow exchange and flow, this is where it will happen. So let's say one pilot with one medical provider won't make a difference, but as soon as the systems start to interoperate between, let's say, medical insurance, car insurance, health insurance, it will start making a massive difference. And personally, one thing I would like for people from the insurance industry to look at is future income insurance. And I know it sounds kind of ridiculous, but I personally don't believe that I would be getting pension or retirement because the system is not designed in that way, right? But maybe in the future, people can borrow against, let's say, their future income. So this is where some of the things that are more difficult to quantify come in, and some things we did not think about, right? Because technologies are changing. We don't know if people will earn, like, we know that people might live very long, but we have no idea what they are going to do.
Yeah. Yeah. Okay. All right. Guys, I'm just conscious of time. I think we're over by about 10 minutes. So I'm going to bring this to a close, but there is a question from our participants. It's a wider question for you, Cesar and Michal, about sort of blockchain adoption generally, you know, for registries and so forth. Do you have a sense of kind of timescales for, you know, more widespread adoption of blockchain platforms and technologies?
Yeah, it's a question that I don't personally like to say like a date. I rather look to the trends.
Yeah.
And definitely what happened last year was a big announcement on how the blockchain technology evolved, how the different cryptocurrencies gain value, how many investors came into it. And it was kind of the graph that Michal was sharing. That was like a peak. Now there is a little bit of deception, but now we start seeing many projects that didn't plan through that bubble, let's say, to go and to keep moving. And the trend is exponential. So the thing is that at the beginning, you don't notice because it's exponential, but it's in the decimals. But once you get 2, then the next one is going to be, you know, 20, and then it's going to be 200, and then it's going to be too fast when that's going to happen. But definitely in the next 5 years, we will see a lot of changes in the spaces because that exponentiality is there and it's happening, and we can track back and forward. And it includes also the insurance industry from my perspective.
Okay. All right. Great.
If I can add numbers, like I would be shooting 3 to 5 years for 2 reasons. One is liquidity. So we're talking now about those securities token offerings, which means that we can basically make more liquid trillions in assets. When this starts taking off, which is probably around 3 years, when we have those voluntary agreements that industry agrees on the standards, so they avoid regulators coming in with heavy-handed regulations. So in 3-5 years, we will start to see this knee of the curve. Yeah. At least that's my guess. And then people will start jumping on board. Okay.
No, that's really, I think, very interesting insights from 2 people that are very close to blockchain innovation, especially in the insurance space, but also other industries. Guys, thank you. I'm going to bring the call to a close, but I'd like to, the following events and calls that we have are an annual event on 30th of October around the corner. And then the next webinar like this will be focusing on the retail sector, and that'll be at the end of November. And if you've got any further follow-up questions following this, please can you reach out to Nadia at WiderPool.com. So what I'd like to say is any questions related to this call specifically for the speakers as well. And then, you know, I guess to close off, it sounds like, you know, we're really at an early and pilot or primitive stage of disruption and innovation in the, you know, insurance space. just from figures looking at, consolidation in the industry, there's more being spent on, mergers, acquisitions of existing insurance companies than innovation from our perspective. And, if any of our participants are keen to have further conversations, either to evolve some blockchain thinking, we can put you in touch with Fluid, with running workshops from an exponential perspective. We can put you in touch with the EXO Foundation. And as you know, just a reminder, WiderPool runs a Scout and Search program where if you are looking to curate innovation and technology, that's what we do. We can help with that. So do reach out for that if you wish to talk further. And what would be really great, I think we're going to be sending out a Q&A. It'd be really good to understand takeaways from this call. Was there any particular trends that you found interesting, or if you've got any further feedback, that would really be beneficial, because I think feeding this back to our speakers will be fantastic, and we can share the results as well at the end of the curation of all of that. Well, anyways, thank you all for taking the time to join us for our periodic call with a deep dive into industry verticals. I look forward to talking more with you guys in the future. And with that, take care. Have a nice evening.